TFNN. Headline News Update. Here's Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. This is the 10 a.m. update, the Everbank update, and let's go straight to the numbers. Dow's down 68 at 17,615. Has to hold the low of yesterday. The low was 17,564. Very strong resistance in the 17,690s to 17,720s. The S&P at this particular moment, it did try to rally, but then it failed, so it's down 7 at 2,061. Very strong resistance in the 20s. I'd say it's the 2072 to 2075. 2078 is actually the 9-period exponential moving average. Going to have a difficult time trying to get there, but if it takes out yesterday's low of 2058, that means it could test the 2056 low of last week, and that would say the 200-period exponential moving average at 2055 and 2051 is the exponential. The 2055 is the simple moving average. That's the target. That's where there should be a bounce. If there isn't, that's very bad news. The weekly chart, both of the Dow and the S&P, starting to fail. We've gone from a sell signal. Let's see if we get a sell mode in the Chapman wave methodology in the S&P and the Dow weekly charts. Let's go to gold, and we'll go to gold and say that gold right now should be running. It's not, because the dollar's soaring. Gold is down 18 at 11.55, broken the low of just 2 days ago. And what we're looking at is a test, and what I've been looking at is the arch formation that says 1143 is the first real goal. That's the area where you might start to get some kind of support. Now we're looking at the daily on the left, weekly chart in the middle here, monthly over there, and the 120-minute here. And what we're looking at is a breakdown that says the gold could go down a little further until, let's go to the dollar, DXY, dollar right now, soaring in leg E, broke the resistance. It's at 97.11, and at this particular stage, it says that the next upside target could be 97.60s. That's going to be a real 97.60s is strong resistance, but 97.70s is the major resistance in the daily chart on the left side. Weekly chart says once you break this downtrend line and you get into the 98s, it could go even higher based on the monthly chart. Let's go to the TLT, because the TLT was soaring earlier on, still soaring. It's up $1.86. This is the Lehman 20-year iShare Treasury Bond ETF, and it's trading at 120, up $1.85. It's really accelerated to the upside, and it says that at this particular rate, the weekly chart this Friday is going to be very important, because if it closes in the 120s, you will be seeing a migration from the safety, so-called safety, well, from equities to the safety of bonds. That's going to be very interesting. Support is at 118.15 at this particular time. And what I wanted to say is just quickly, the VIX index is running quite sharply, but it isn't as sharp as you would expect, isn't it? It didn't go to yesterday's high yet. It's at 18. It's up 99 cents. Watching this closely, because if the VIX by the end of the day, because there's a counter trend rally, suddenly starts to slide into the under 17, you will see the market have a 1 to 2 day rally. But at this particular point, the levels that we've looked at are very important. If the VIX goes into the 19s, this market's going even lower. And a couple of things that we want to look at here is if you're looking at the euro, EUR, USD, you will see that the euro has had the comparable move to the downside, and that pattern that I very often talk about in the Tiger Technicians Hour, which is my show, which I do at 11 o'clock to 12 every day, that talks about the lowercase h pattern. And that's exactly what you're looking at here in the Euro USD weekly chart. And it says if the euro breaks the low of the week of the 29th of May, goes under 1.081, it could retest all the way to the bottom. It's not a very good looking chart at this particular point. So I just wanted to tell you that this is brought to you, the 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN. Thank you for being here.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.